The Reserve Bank of India's August monetary policy meeting is behind us. As expected, the central bank chose to keep interest rates unchanged once again for the 9th consecutive time. What was not expected was the hawkish tone of RBI Governor Shaktikanta Das. Among issues he raised, Das also expressed concerns over the surge in top-up home loans, hinting that borrowers might be using this extra cash for speculative investments, particularly in the stock market. Now, why is the RBI so worried about this? Let's break it down. First off, what exactly is a top-up home loan? Think of it as an add-on loan that you can get on top of your existing home loan. So if you have already got a home loan and have been paying it off for at least a year, you might be eligible to apply for a top-up loan. The amount you can borrow as a top-up is based on the remaining principal of your home loan, and the approval process follows suit. But unlike your regular home loan, which comes with specific rules like it must be used for buying or construction of a property, a top-up loan offers a lot more flexibility. You can use it to renovate your home, furnish it, or even cover personal expenses. And here's the kicker. Top-up home loans are cheaper than personal loans. Why? Because they are secured against your property, which lowers the lender's risk and allows for a lower interest rate. Sounds like a sweet deal, right? Well, this is where the RBI is starting to raise some serious red flags. Governor Das pointed out that while these top-up loans are becoming more and more popular, some banks and NBFCs might not be playing by the rules. They are supposed to adhere to the guidelines like maintaining the correct loan-to-value ratio and monitoring how these funds are actually being used. If these guidelines are ignored, it could lead to funds being channeled into unproductive or speculative activities, something that the RBI is not too keen on. The crux of the issue is that the RBI doesn't want to see this money flowing into volatile assets like equities and other speculative investments. Why? Because it can increase the chance of default, putting both the borrower and the lender in a risky position. Essentially, the RBI's concern is that people might be taking on these top-up loans not to improve or maintain their homes, but to gamble on high-risk investments. And if those bets don't pay off, the consequences could be severe. Not just for the individuals involved, but for the broader financial system as well. In the end, while top-up home loans can be a great tool when used responsibly, the RBI's message is clear. Borrowers and lenders alike need to tread carefully. If banks and NBFCs don't tighten their practices, we could see stricter regulations down the road. And for borrowers, the temptation to use this money for quick gains should be weighed against the potential risk. So while the RBI isn't hitting the panic button just yet, the warning is there. Proceed with caution.